Stocks on Wall Street close in the positive territory with S&P 500 and Nasdaq notching a new record high. Asian markets open mixed as investors assess Trump tariffs plan, and the gift Nifty is indicating a slightly positive start for the Indian market. Crude oil prices edge lower as the investors weigh easing West Asia risk and possible OPEC plus output increase in August. Brent trades at $66 a barrel, while the gold edges higher, supported by a weaker US dollar. The trade negotiations between India and the US are at a sensitive stage, as government sources say. If the talks fail, 26% additional tariff on India are imminent, and White House says that President Trump and Secretary of Commerce are finalizing trade agreements and that an announcement would be made soon. Auto sales numbers for the month of June will begin to be reported from today. Wholesale estimates indicate a similar trend as Vahan registration data. The two-wheeler category is expected to be the biggest outperformer, followed by the tractor sector. Apollo Hospitals has approved a reorganization plan to spin off and list its omni-channel pharmacy and digital health business within 18 to 21 months into a new listed entity called NewCo, aiming to create a 25,000 crore rupees healthcare platform. Hello, good morning. You've tuned into CNBC TV 18 and you're watching Power Breakfast with me, Vinny Motiwala. Let's look at what the Asian markets are doing this morning. We have Hang Seng that shut in trade, but other than that, a mixed opening is what we are watching out for as of now. ASX 200, mild positive there. Taiwan index managing to hold on to good gains. On the other hand, we have Nikkei that's down in trade. Shanghai, that is very, very muted. So that's something that we'll be watching out for. A mixed opening right now is what we're seeing coming in from the global Asian markets as of now, and US markets also seems like a bit of positive end is what we're seeing for the US markets. Higher in terms of trade. Dow Jones that climbed and was climbing as much as 276 points in yesterday's trading session. S&P 500 that added around 32 points, while we're seeing the tech-heavy Nasdaq that has hit an all-time high by adding around 96 points. What more happened in terms on the Wall Street? We have CNBC's Angelica Peebles joining in with us to get us a wrap. Angelica.
U.S. markets were higher Monday as investors closed out the final day of the first half with new hopes for U.S. trade deals, and Apple shares drove the Nasdaq higher in late-day trading. The Dow climbing 276 points, the S&P 500 adding 32 to post another record close, and the tech-heavy Nasdaq is also hitting an all-time high, adding 96. Apple shares soared more than 2% on Monday following a Bloomberg report that the company is considering using AI technology from Anthropic or OpenAI to power a new version of Siri. If Apple goes through with the plans, it would be a major reversal from its past strategy of building new technologies in-house. That late-day surge coming despite an earlier decision on Monday from a federal judge who turned down Apple's motion to dismiss a lawsuit from the Justice Department that accuses it of unlawfully dominating the U.S. smartphone market. And less than one day after Canada dropped plans for a digital services tax, National Economic Council Director Kevin Hassett told CNBC on Monday that the White House expects other countries to drop similar levies as they try to negotiate favorable trade deals with the Trump administration. Canada reversed course on the tax after President Trump abruptly cut off trade negotiations between the two countries on Friday. Trump said over the weekend that he has no plans to further extend the July 9th deadline for countries to secure deals with the U.S. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. On that note, the U.S. President Donald Trump wrote to Fed Chair Jerome Powell as well, urging him to lower interest rates. In a press briefing, the White House press secretary displayed a copy of Trump's handwritten notes to Powell on a piece of paper showing the interest rates charged by more than 24 countries. Let's take a look.
Unfortunately, we have interest rates that are still too high. So the president sent this note to the Fed chair today. And if you look at this chart, this is a chart of all of the interest rates of many countries throughout the world. At the top is Switzerland. They're only paying a quarter for interest rates. Cambodia, Japan, Denmark, Thailand, Botswana, Barbados, Taiwan, Bulgaria, Cuba, Sweden, Morocco, Cabo Verde, South Korea, Algeria, Canada, Albania, Libya, Malaysia, China, New Zealand, Trinidad and Tobago, Czechia, Bolivia, Australia, Costa Rica, the Bahamas, Kuwait, Papua New Guinea, Bosnia, United Kingdom, and the UAE are all paying lower interest rates than the United States of America, which has one of the hottest and strongest economies in the world. The president sent this note to the Fed chair. It says, Jerome, you are as usual too late. You have cost the USA a fortune and continue to do so. You should lower the rate by a lot. Hundreds of billions of dollars are being lost, and there is no inflation.
And continuing with updates from the US, President Donald Trump's mega bill on tax breaks and sweeping cuts to healthcare and food programs is set to be cleared. Here's what the White House National Economic Council Director Kevin Hassett has to say on the bill and July 9th tariff deadline as well.
You remember that in the House bill, there were a bunch of things that were temporary. That were there for the first 4 or 5 years, but then looked like they raised money in the out years. But of course, a big tax hike in the 5th year is going to cause a recession and reduce growth and increase the deficit. The number that I think is the best number to think about when you're looking at that 3.3 trillion is that if we get 3% growth instead of 1.8% growth out of this bill, then that adds 4 trillion to revenue, which means that this thing is a big deficit reducer. This is the biggest spending cut in history, the biggest tax cut in history, and with a little bit of growth, it's going to be incredibly positive for the budget. I think that we've got a whole number of deals, double-digit deals, that we've got frameworks just like we have for the UK that are just about agreed to. As soon as the tax bill is passed, I think that there's going to be a marathon session in the Oval where we'll go through them one by one with the president, and we'll make the final call, set the tariff rates, and show the world all the work that Howard Lutnick, Jameson Greer, and Scott Bessent have been doing.
Now let's see what Richard Sharma, chairman of Rockefeller International, had to say about the US markets.
So there are risks to the U.S. market, and I still think that the U.S. market is very overvalued, which does not bode well for future returns. But I think that, just have to be intellectually honest here. I'm just trying to sort of look at that. Why is the economy and the market holding up so well in the face of such negative news, as that old Wall Street saying goes, that if it's in the news, it's in the price. So if it's not already in the price, all this negative news, what really will cause the U.S. market to kneel over?
Now, that's all the global market action that we have for you all this morning. But how is all this going to be impacting our Indian markets? We have a team of research joining in with us to set you up for trade, tell you which are the important stocks to watch out for as well. Urmas, first up, coming to you, what are we watching out for in terms of important cues? Yesterday, a bit of a dull day that happened by the end of the day in terms of the Indian markets. Today, are we expecting a green start?
Morning, Winnie. In par for the course, right? Even if it was a day of consolidation after the breakneck up move that we saw over the last 4 trading sessions, and the index was up almost 700 points. So it took a bit of a breather yesterday, and it was, of course, the index heavyweights that led the up move. They saw some bit of profit booking from higher levels, be it HDFC Bank, be it ICICI, or be it Reliance. All of them contributed towards the downside for the index. But the positive was the fact that despite ending lower, it managed to make a higher high on the chart, being that the intraday high of yesterday was higher than the intraday high of Friday. So that was a positive that came in. Of course, the broader markets continued to remain outperformers, be it the mid caps or the small cap index, both of them ending significantly in the green, led by the PSU banks, which was the top sectoral gainer yesterday, even though the Nifty bank ended lower, but the PSU bank index was among the top gainers with gains of over 2.5%. Of course, the real action begins now with in terms of the domestic cues. We'll have auto sales numbers starting from today. The first quarter business updates have already started to trickle in from companies like Ireda and HUDCO, and today also being the weekly expiry of the sensex contract, so that can add to some bit of volatility as well. And of course, any progress on the trade talks between India and the US could be an additional kicker for the markets. Of course, we have 3 new listings today, so you keep an eye out on that as well, followed by the big HDB financial listing tomorrow. That Monday's high of yesterday, 25,662, will be an important level to watch out for, and yesterday's low of 25,474, that is also an important level to watch out for on the index. And of course, for now, the GIFT Nifty is indicating a slightly subdued start for our own markets, but there are lots of triggers to watch out for in today's session.
Absolutely, Urmas. Thank you so much for that. A lot of triggers that we'll be keeping an eye out on, but which are the important stocks that you should be keeping on your radar today? We have Upasna joining in with us to give us that list. Good morning, Upasna.
Well, good morning, Vinny. A lot of stocks on our radar on the back of order wins. Firstly, BEL company has secured additional orders worth 528 crores since 20th June 2025. Kalpataru projects company along with its subsidiaries have secured new orders worth 989 crore is what they've indicated. NCC also in focus as company has received orders worth 1691 crore in the month of June 2025. KSB also in focus as the company backs 15 boiler feed pump order from L&T for NTPC power plants. SJVN, the company achieves commercial operation for its Bikaner solar power project on 30th of June. Now, NMDC also in focus as the company cuts prices effective from today. Now, price cut or in lump is about 600 per ton and in fines it is nearly about rupees 500 per ton. So, this is nearly about 11% price cut as compared to the last month overall. Now, Canfin Homes also in focus as it appoints Abhishek Mishra as the CFO for 3 years with effect from 30th June 2025. And lastly, coming to CG Power, the CG Power opens its QIP and the indicative size is about 3,000 crore. And according to our sources, the indicative issue price would be somewhere around 660 per share. So all in all these stocks in our radar today.
Absolutely keeping an eye out on all those stocks in today's trading session. But finally, Mangalam is here to tell us what are we watching out for in the world of F&O. Good morning, Mangalam.
Good morning. So yesterday, if you looked at the markets, you would say that, there was a bit of consolidation. I tell you what, it was just the Nifty pausing for breath after 4 days of rallying and perhaps, taking a step back before it takes a few steps forward. Why do I say that? Because despite the Nifty falling about 0.5% and the Nifty Bank falling about 0.25%, the broader markets did extremely well. And that typically happens when the street believes that there is very strong support at lower levels. Look at the Nifty Next 50, mid-cap index as well as the small-cap index. All of them doing well. All through yesterday's trading session, the advance decline was firmly in favor of advances. So the green line firmly above the red line. And at the same time, even if you look at it, there was no major worries when it came to flows. The FIS sold about 800 crores in the cash market. DIS more than bought that by 3,500 crore of purchase. The FIS unwound some long positions in index futures. So 903 crore worth selling. No further shorts added. They just took some profits home for the last 2 trading sessions. The longs, which were at 38%, are now dropped to 36%. Now, here's where the positive news comes in. Remember, yesterday we had pointed out that the India VIX had fallen a lot and it's perhaps pricing in complacency. Now it seems like yesterday's down move has taken the India VIX slightly higher, so it's normalizing. Complacency is getting out of the way. And secondly, the PCR, the put-call ratio, was at overheated zones of 1.25. Now it's normalized to 0.81. Remember, it gets into overcold zones at around 0.7, 0.75. So that's something we'll be watching out for. A lot of the put writers, which were aggressive, were taken to cleaners yesterday. 25,600 put writers shed positions. 25,500 put writers also shed positions. Will call writers be taken to cleaners today? It's something that we will be tracking. For the Nifty to move further higher, we'll just have to move past yesterday and day before yesterday's lows, highs, which is 25,650, 25,679. So we'll keep an eye out on that. And we pointed out that RBL Bank is likely to enter F&O ban. That's exactly what has happened. We'll keep an eye out on this stock.
Okay, Mangalam, thank you so much for that. But on that note, we're going to actually step into a very short break. After the break, we'll get you details for Apollo Hospitals' demerger plans. Stay tuned in for that. Welcome back to Power Breakfast on CNBC TV 18. Now let's talk about one more stock that's going to be in focus today. That's going to be Apollo Hospitals. Why? Apollo Hospitals has approved a reorganization plan to spin off and list its omni-channel pharmacy and digital health business within 18 to 21 months. And this is going to be aiming to create some 25,000 crore rupees healthcare platform is what they're looking out for. Now, Ekta is joining in with us to give us the details on this front. What is the demerger plan as well? Good morning, Ekta.
Hi, morning. So yes, Apollo Hospitals is going to demerge its pharmacy, digital health and pharma distribution business into a new listed entity which is termed as NewCo as of now. So the transaction involves 3 steps: demerger of the omni-channel pharmacy and digital health business, which is Apollo 24/7, amalgamation of Apollo Health Co., which is, contains Apollo 24/7 with the new company, and merger of KMed, which is India's largest pharma distributor according to the company, into the new company. So Apollo Health shareholders or Apollo Hospital shareholders will receive 195.2 shares of the new company for every 100 shares of Apollo Hospitals. Now, the new company is expected to be listed between 18 to 21 months. Apollo Hospitals will be retaining a 15% stake, and the components in the new company will be Apollo 24/7, Apollo Pharmacies, KMed, and Apollo Hospitals Telehealth Unit. The projected revenue, like you mentioned, eventually they're targeting 25,000 crores by FY27 with a 7% EBITDA margin and 16,300 crores in FY25. The structure, the most positive aspect, removes the holding company discount that Apollo Hospitals had. There's a call at 12 p.m. today.
Okay, thank you so much for that, Ekta. We'll keep an eye out on more details coming in from the call as well. But let's move on. And the RBI has released its financial stability report, saying that Indian financial system remains resilient with healthy balance sheets amid the elevated global uncertainties. Bad loans are expected to stay near multi-decade lows, and banks have adequate capital buffers even under adverse scenarios that are going on right now. Lata is joining in with us to give us more details on this report. Lata, good morning.
Good morning. One way to summarize is that it is global risk but domestic bliss. That seems to be the message. Globally, both the global economy and the financial system are seeing elevated risks from economic policy and trade policies. As we know, the financial markets are also volatile, especially the bond market. The report points out. And then there are the old vulnerabilities, which is, too much public debt. Look at the fiscal deficit of the US, China, Europe. So the old problems remain, new problems in terms of trade wars have come, and all this can amplify asset quality shocks. But in this ecosystem, the Indian economy stands as a beacon of resilience. It's actually a key contributor to global growth itself, since it's one of the largest growing economies. As well, it is underpinned by strong macros. The balance sheets of banks, NBFCs and corporates are very clean, as the report points out. And the stress tests on mutual funds and clearing corporations also show that stress is low. The insurance regulator points out that consolidated solvency ratio of insurance companies remains above the minimum thresholds that are required. So all aspects of the financial sector are good. Remember, the FSR is actually a comment on financial institutions. So it delves a little deeper into banks. Status of banks, gross bad loans and net bad loans are both at multi-decadal lows. Gross NPAs at 2.3%. Lowest ever, and net NPAs at 0.7%, again, lowest ever in many, many decades, or probably the lowest ever. Credit growth is the problem. That was down to 11% as of March, and they expect as of mid-June, it has fallen to 9.6%. So the worry is growth, not asset quality. And for the first time, PSU banks' credit growth is faster than private banks, the report points out. Then the FSR normally builds stress scenarios. If you build a stress scenario in the baseline, the gross NPAs of banks doesn't rise at much, 2.3 to 2.5. So what it is telling you is that this 2.3 is the best. Even as a baseline, it is going to rise to 2.5 in the next 2 years, March 2027. But in adverse scenarios, it can grow more. I'll come to that. The baseline capital adequacy also dips in the baseline, and CET, which is equity, common shareholder capital, that actually rises in the next 2 years because of retained profits of banks. But in adverse scenarios, things will be different. The GNPA goes up to 5.6 and 5.2, and capital adequacy also dips. These are the adverse scenarios that the Reserve Bank builds to stress test the banks. On NBFCs, again, the GNPA is very good. Gross NPAs are at multi-decadal lows of 2.9%. Again, if you apply the risk, baseline itself, it rises to 3.3. Now, this is important. As of March 2025, 2.9 is a multi-decadal low. but it is going to rise to 3.3 according to the RBI. In adverse scenarios, it rises more. Then again, capital adequacy at the moment is 23.4. It may dip to 21.4 by the time you come to March 2026. And credit growth again for NBFCs also weakened. It weakened for most sectors. It weakened most for unsecured loans, and for MFIs, that is microfinance, it contracted.
Okay, Lata, thank you so much for that. But on that note, we're going to actually step into a very short break. After the break, we'll tell you what's happening in the world of commodities. Stay tuned in. Welcome back to Power Breakfast on CNBC TV 18. Now we have Manisha Gupta joining with us to tell us what's happening in the world of commodities this morning. Good morning, Manisha. Crude again in focus?
It is, and slightly on the weaker side, really. Even as we've put 2 months of gains, well, we've seen the month of July start nearly 0.5% on the lower side for the commodity there. All focused really on the OPEC meeting right now, because that is what markets are looking at in sense of increase in production now, with an expectation that you could be looking at 411,000 barrels per day of an increase, and that would mean nearly 1.7 million barrels coming back into the global supply from OPEC itself. The other important thing is to watch out for metals, because overnight this is an area which has seen good gains because of the dollar decline. So gold prices gained up by 1%. Tin is trading at a 3-month highs. Aluminum prices at a 3-month highs as well. So is the copper price is trading at a 3-month highs because of the falling stockpiles there, inventory concerns. And you have lead now trading at a 13-week highs as well. So almost everything in the metal space, whether it's gold, silver, base metals, ferrous metals also are doing quite well in the Asian markets right now.
Okay, Manisha, thank you so much for that. So crude and metals is what we're keeping an eye out on. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Nifty implied indicating a bit of a muted to a slight bit of a positive start for the Indian market. Don't go anywhere. Your Bazaar Morning Call up next to take you through all that market action.